The latest CNBC Fed Survey is out, and Steve Liesman has the highlights on that. Steve, good morning.
Hey, good morning, Becky. Respondents to the CNBC Fed Survey showing or expecting a hawkish cut. That is a cut followed by a pause, but also showing deep divisions over whether the Fed should cut at all, likely reflecting the same split on the committee. Take a look. 87% think the Fed will cut this week, but only 45% think the Fed should cut. That's a kind of historic differential there for our survey. 2 dissents are expected. That's the median. And only 35% are expecting a rate cut come January. Scott Wren of Wells Fargo Investment Institute writes in, the Fed will cut in December, even though you can make a very rational argument that they should not do anything. The biggest risks out there to the economy, well, continued high inflation sort of surging to the top. It had been number 4. The AI bubble bursting, that's been there, or that's a new entrant there. The concern about Fed independence, the fiscal deficit, and administrative policy uncertainty rounding out the top 5 risks to the economy. Meanwhile, the growth outlook has been ticking up, running at 2% this year and higher next year, while inflation forecasts to remain above the 2% target. So that's part of the problem there. Diane Swank, chief economist, KPMG, says most are underappreciating the likely stimulus due to record tax refunds in the first half of 2026. That means we're also likely understating the risk that inflation could stick. And not much downside here seen in the job market, with the unemployment rate rising only a few tenths, or forecast to do so next year, and declining a bit in 2027. Still, several respondents are saying the Fed needs to cut here because of potential weakness in the job market. Alan Sinai of Decision Economics writes in, the Federal Reserve is behind the curve again, this time on the widespread weakening of the labor market. A preemptive 50 basis point cut in the federal funds rate is the right thing to do. And that maybe explains what motivates the cut at this meeting. The greater risk, or the belief on the Fed that the greater risk is that when all this data finally come out, and that is next week, it's going to show a weak labor market more than the risk that it's going to show higher inflation. Becky?